Welcome back. Today, we're going to be taking a deep dive into something that's super relevant, especially if you're a millennial.
Yeah, for sure.
We're talking all about investing on autopilot.
Definitely.
We found this great article called Investing on Autopilot, Hands-Off Ways to Grow Wealth for Millennials. And it's packed with insights.
Yeah, it really is.
So basically, imagine this. You're building wealth without constantly checking stock prices or like freaking out every time the market dips.
Exactly.
That's the promise of investing on autopilot.
And it's a total game changer.
Yeah.
Especially for millennials who are, already dealing with so much.
Totally.
Student loans, trying to launch a career, maybe thinking about buying a house someday.
Yeah, all of that.
Investing just feels like this big, overwhelming thing,
Oh, yeah, absolutely.
But that's exactly why this autopilot approach is so genius.
So less about picking individual stocks and more about just like setting up a system that works for you.
Exactly.
Got it.
And this system, it plays into one of the biggest advantages millennials actually have.
Okay, what's that?
Time.
Time. Okay.
See, the earlier you start investing, even if it's with small amounts, the more time that money has to kind of like work its magic.
Right.
We're talking about the power of compounding where your returns start generating even more returns.
Compound. Okay, so that's where it gets really interesting, right?
Yeah.
Can you break that down for me a little bit? Like, how does that actually work with this whole autopilot investing thing?
Absolutely. So picture this. You're 25 years old, and you decide to invest just $100 a month
Okay.
in a broad market ETF, think something like VTI or SPY.
Right.
These basically track the overall stock market.
Got it.
You keep doing that consistently. And thanks to compounding, by the time you hit retirement, you could be looking at a portfolio worth hundreds of thousands of dollars.
Serious.
Seriously.
Mm-hmm.
That's the power of starting early and letting your money grow over time.
Okay. That is pretty mind-blowing. So even if I'm not, rolling in cash right now,
Right.
these small, consistent investments, they can really add up over time.
Precisely. And there are actually tools specifically designed for this kind of autopilot approach.
Like what?
Think about apps like Acorns. Have you heard of that one?
I have, yeah.
It rounds up your purchases and invests the spare change.
Oh, that's smart.
It's so subtle, you're literally investing without even thinking about it.
I like that.
Or there's Stash, where you can start investing with just $5. No more excuses about not having enough money to get started.
Yeah, that's a good point. I feel like these apps could be a really great entry point for someone who is maybe brand new to investing.
Absolutely.
Yeah, okay, cool.
They really break down those barriers to entry and make investing feel way less intimidating. And another cool thing is they typically handle diversification for you automatically.
Diversification.
You know that whole don't put all your eggs in one basket?
Right, right.
They spread your investments across different types of assets to reduce your risk.
Okay, that makes sense. But what about the emotional side of investing? Because I know I get nervous just thinking about like market dips and, the ups and downs.
Totally understandable.
So does this autopilot approach actually help with that?
Absolutely. And that's where robo-advisors come in. So these platforms use algorithms to build and manage a diversified portfolio tailored to your goals and your risk tolerance.
So basically it's taking the emotion out of it.
Exactly. They're making decisions based on data, not on your, fear or sudden urge to try and get rich quick.
Okay, that makes me feel better already.
Right. The article mentions platforms like Betterment, Wealthfront, and Ellevest.
Okay, yeah, I've heard of those.
Each one kind of has its own strength. Like Betterment's great for helping you reach specific goals. Wealthfront is awesome for higher earners who want to be tax efficient. And Ellevest is designed specifically with women's financial needs in mind.
So I'm basically like handing over the reins to an algorithm that's way more rational than I am when it comes to money.
Exactly.
Okay, I can get behind that.
And the beauty of it is by automating it, you're far less likely to make those kind of impulsive decisions that can really hurt you in the long run. You're sticking to the plan no matter what's happening in the market, which is key to long-term success.
So it sounds like robo-advisors are a great option for people who just want to truly set it and forget it.
Exactly.
But what if I want a little bit more control over my investments? I still want to be involved in some of the decisions.
The article actually highlights M1 Finance for that.
Okay.
It lets you customize your portfolio, they call them pies, where you decide how to allocate your investments.
Pies, okay.
Yeah, it's kind of like designing your own investment pizza. You pick the toppings of, the assets you want.
Okay, I like that. I'm a little hungry now.
Yeah. But the best part is that M1 Finance automatically rebalances your portfolio to stick to your desired allocation so you don't have to constantly tweak it.
Okay, so it's like customization plus automation.
Exactly.
I like that.
Yeah.
But speaking of planning, what about retirement? That feels like something that a lot of millennials kind of push off.
You're right. But the power of starting early cannot be overstated when it comes to retirement. And luckily, you can even put your retirement savings on autopilot.
Okay, so this is where like the 401k comes in, right?
Absolutely. So if your employer offers a 401k, especially if they match your contributions, that's free money.
Free money. Gotta love
Yeah,
that.
you don't want to miss out on that.
Yep.
And you can typically set up automatic deductions from your paycheck, so you're literally saving without even realizing it.
Okay, so that's amazing if you have access to a 401k. But what about people who don't have that option through their work?
No worries. The article also talks about individual retirement accounts, or IRAs, as a great alternative. Platforms like Vanguard make it really easy to set up an automated IRA with different investment options. They even have these things called target date funds, which adjust their risk as you get closer to retirement, making it truly hands-off.
Okay, cool. So many options. This is great. I love that there are so many choices out there. But speaking of personal preferences, what if I have specific values that I want to reflect in my investments? Like, say I want to support companies that are environmentally friendly or socially responsible.
Oh, you're so on trend.
Oh, okay, good.
This whole idea of values-based investing, especially ESG investing, environmental, social, and governance, is huge right now, especially for millennials who want their money to support companies that align with their beliefs.
So, right, that makes sense.
And guess what? There are platforms that cater specifically to this. For example, both Betterment and Wealthsimple offer socially responsible investment portfolios,
Oh, cool.
focusing on companies that are making a positive impact on the world.
So you can grow your wealth while also contributing to causes that you care about.
Exactly. It's a win-win.
That's awesome. Okay, so we've covered a lot of ground here. We talked about how autopilot investing can make building wealth so much less stressful and really accessible, especially for millennials. We looked at some cool apps, robo-advisors, even how to get started with retirement planning.
For sure.
But before we get too carried away with all this automation, is there a risk of totally forgetting about our investments? Is there a downside to just completely setting it and forgetting it?
That's the myth of set it and forget it.
Okay.
While autopilot does take care of the day-to-day, you can't completely ignore your finances.
Right.
Think of it like setting your ship on autopilot.
Yeah.
You still need to check the compass every now and then and maybe make some course corrections.
So I'm still the captain, even if I have a really trusty autopilot crew.
Exactly. Life happens.
Yeah.
Your career might take off. You might get married, start a family. These are big life changes that could mean you need to adjust your investment strategy.
Okay, yeah, that's true.
The key is to check in periodically.
Yeah.
Maybe once or twice a year, just to make sure everything's still on track.
So it's about finding that balance between automation and still being involved.
Exactly.
Got it. But overall, it sounds like this is a fantastic way to simplify our financial lives, Free up more time and energy for, actually living.
Exactly. Whether it's focusing on your career, pursuing your passions, or just enjoying those everyday moments, autopilot investing can really help you build wealth without constantly worrying about the markets. It's about finding that financial peace of mind so you can actually enjoy the journey.
I love that aligning your finances with your lifestyle and your values. It's a powerful combination.
And it's a reminder that investing doesn't have to be this big, scary thing.
Right.
With the right tools and strategies, it can be a seamless part of your life.
That's an awesome way to think about it. So we've got the big picture, but let's get into the details of actually setting up your own personalized autopilot investment plan. We'll explore some specific tips and tricks in the next part of our deep dive, so stay tuned.
Absolutely.
Okay, so we've got this big picture of autopilot investing. It's all about automating your investments to build wealth steadily, especially with those millennial years on our side.
Yeah, definitely.
But now let's get into the nitty-gritty.
Okay.
How do we actually set up our own autopilot system? Where do we even begin?
That's a great question. The first step, and arguably the most crucial, is to pinpoint your financial goals.
Okay.
What are you actually aiming for? Is it a comfortable retirement, a down payment on a dream house, early financial freedom, or maybe a world tour?
All good goals?
Having a clear vision of your why is like setting your financial GPS.
Okay.
It'll guide your decisions and keep you motivated, especially when the markets get a bit bumpy.
So define my why. Got it.
Exactly.
What comes next? Do I actually start picking investments?
That's the next step. it's time to choose your investment vehicle. We've
Okay.
talked about robo-advisors, those cool apps like Acorns and Status Class, the classic 401ks and IRAs.
Right.
But remember, each of these categories has tons of options with different fees, investment styles, and even target audiences.
Oh, wow. So many
It's
choices.
like walking into this giant investment supermarket.
Yeah, that makes sense. So it's about finding the right platform or account that fits my goals, my risk tolerance, and how much I actually want to be involved, right?
Exactly. So, for example, if you're all about hands-off and you love the idea of goal-based investing, Betterment could be a perfect match.
Okay.
But on the other hand, if you're earning a good income and you really want to be smart about taxes, Wealthfront, with its focus on tax loss harvesting, might be a better fit.
Wait, hold on. Tax loss harvesting. That sounds kind of complicated.
It's actually a pretty clever strategy, especially for higher earners.
Okay.
It basically involves selling investments that have lost value to offset capital gains, which can lower your tax bill.
Okay.
Wealthfront is designed to do this automatically, which can make a real difference in your net returns over time.
Okay, that's good to know. So lots of options to consider. What's the next step in actually getting this autopilot thing running?
The key is automation.
Okay.
You want to set up a system where money flows directly from your checking account to your investment account on a regular basis,
Got it.
like clockwork.
So it's like setting up a recurring bill payment.
Exactly. Most platforms make it super easy.
Cool.
So yeah, you're basically taking the decision-making out of it, making sure you're consistently investing, even when you're busy or tempted to spend that money on something else.
Right. It's like paying my future self first.
Exactly. And remember that compounding magic we talked about?
Yeah.
Even small amounts invested consistently can grow significantly over time.
Right.
Automation ensures that you're consistently adding fuel to that compounding engine no matter what the markets are doing.
It's like having a financial guardian angel,
I like that.
making sure I stay on track even when I'm tempted to stray.
Yeah, for sure.
So we've got our goals, we've got our investment vehicle, and our contributions are automated.
Yep.
Anything else we need to consider for our autopilot setup?
This is where diversification comes in.
Like diversification.
Remember, we don't want to put all our eggs in one basket.
Right. That's like investing 101.
Imagine investing all your money in just one company, and that company goes belly up.
Yeah, that would be bad.
That's where spreading your investments across different asset classes like stocks, bonds, real estate comes in.
Right. Diversification. Don't put all your eggs in one basket.
Exactly.
But honestly, managing all that sounds like a lot of work.
That's the beauty of it.
Okay.
Many of the platforms we've talked about, like robo-advisors and those target date funds, handle diversification automatically.
Really?
Yeah, they essentially create a pre-mixed investment cocktail based on your risk tolerance and time horizon.
So I'm getting instant diversification without having to pick and choose individual investments.
Exactly.
I like that.
And this is a huge advantage for beginners.
Yeah, for sure.
It takes the guesswork out of portfolio construction and makes sure you're not overly exposed to any one type of asset.
Okay. That's a big relief. What about fees?
Yeah.
I know fees can really eat into your returns, especially over time.
You're right. And millennials are super savvy about costs, and for good reason. The good news is, autopilot investing often comes with lower fees compared to traditional investment approaches.
Okay, that's good.
For example, many robo-advisors and online brokerages charge significantly less than traditional financial advisors or those actively managed mutual funds.
So it's cheaper and it takes care of all the complex stuff.
Exactly. It's a win-win.
Sign me up.
Right. And to sweeten the deal, some platforms like Fidelity Go and Schwab Intelligent Portfolios even offer zero management fees for smaller accounts.
Zero fees. That's incredible.
It is. It really makes investing accessible to everyone.
Yeah, that's amazing.
Every penny you save on fees is a penny earned for your future self.
I like the way you think.
So it's definitely worth doing your homework and comparing fees before you choose a platform.
Okay. I'm feeling really empowered to do that research now. Great. It's amazing how autopilot investing can really simplify all those technical details like diversification and fees so you can just focus on the big picture.
It is.
It's like having your own personal financial assistant working behind the scenes, making sure everything is running smoothly.
That's a great way to put it.
All right, so we've talked about setting our goals, picking an investment vehicle, automating contributions, diversifying, and keeping an eye on those fees.
Yep.
Is there anything else we need to consider in setting up our autopilot investment plan?
One crucial aspect we haven't really touched upon yet is the need for monitoring and adjustments.
Okay.
Remember, autopilot doesn't mean neglectopilot.
Right. We talked about checking in periodically,
Yeah.
but what exactly should we be looking for during those check-ins?
Well, life is full of surprises.
That's for sure.
And your financial goals and circumstances can change over time. You might get a promotion, get married, start a family, or experience other major life events that could totally impact your investment strategy.
So it's about staying engaged with our finances, even if we're not actively trading stocks or tweaking our portfolios every day.
Precisely. The article recommends checking in once or twice a year to review your investment performance, reassess your risk tolerance, and ensure your portfolio is still aligned with your goals.
Got it.
Think of it like a financial checkup, similar to, going to the doctor for a regular visit.
Preventative care for our finances. I like that.
Exactly.
Are there any common pitfalls to watch out for when it comes to autopilot investing, mistakes that people often make?
One common mistake is truly setting it and forgetting it.
Yeah, okay.
Those periodic check-ins are crucial to make sure your autopilot is still on course.
Got it.
It's about finding that right balance between automation and oversight,
Okay.
not just blindly trusting the algorithm.
So I'm still in control.
You are.
I'm an informed captain.
Exactly.
Got it. Any other traps to watch out for?
Another pitfall is not adjusting your contributions as your income grows.
Oh, that's a good point.
If you're lucky enough to get a raise or land a better paying job, make sure you increase those investment contributions accordingly. Yes, it's about scaling your investments as your financial situation improves.
So you can reach those goals faster.
Exactly.
Got it. Any other ones?
One of the biggest ones is not taking full advantage of employer-sponsored retirement plans, especially if there's a matching contribution.
Yeah, those are important.
Seriously, that's free money you're leaving on the table. And a final pitfall is chasing returns or making impulsive decisions based on market hype or fear. Remember, autopilot investing is all about taking the emotion out of it and focusing on slow and steady growth over time.
So discipline is key even when the market is going crazy.
Absolutely. It's about sticking to your long-term plan and resisting those knee-jerk reactions.
Okay.
Trust the process, stay the course, and let your autopilot do its thing.
Wow, this has been incredibly insightful. I feel like I have a much clearer understanding of how to actually set up my own autopilot investment plan and avoid those common pitfalls.
Good. I'm glad to hear that.
It's amazing how much information is packed into this article.
It is a gold mine of knowledge for sure.
It really is. And remember, investing is a journey, not a destination.
Well said.
It's about finding what works best for you, your goals, and your lifestyle.
Exactly.
And it doesn't have to be complicated or overwhelming.
Right.
Autopilot investing really makes building wealth accessible and achievable for everyone, especially with all of the tools and resources available today.
Well said. And with that, I think we've covered the key strategies and considerations for setting up your very own autopilot investment plan.
Okay.
Are you ready to move on to our final part, where we'll delve into the fascinating intersection of technology and human intelligence in the world of automated investing?
Absolutely. We've covered so much ground already, but I'm really curious to explore that human element.
Yeah.
Can we truly hand over all control to algorithms, or is there still a place for our own judgment and intuition? Stay tuned, everyone. We're about to unpack that very question in our final part of this deep dive. Okay, so we're back and ready to tackle this big question. What's the role of human judgment in a world where investing is increasingly automated? Can we really trust robots with our money?
Right.
Or is there something irreplaceable about human intuition?
It's a question a lot of people are grappling with as technology keeps transforming the financial world.
Yeah.
It's almost like this epic battle,
Uh-huh.
humans versus robots. But I actually think it's more about finding that right balance.
Okay.
Where humans and technology can work together for the best possible outcomes.
So less of a battle, more of a partnership.
Exactly.
Okay, I like that. Tell me more about this balance. What are humans bringing to the table that algorithms just can't replicate?
Well, algorithms are amazing at processing huge amounts of data. Spotting patterns and executing trades super fast,
Right.
like in a split second.
Mm-hmm.
But they can be a bit rigid.
Okay.
They operate based on rules and historical data. So when something unexpected happens, like a sudden geopolitical shift or a major change in consumer behavior, they might not adapt as quickly as a human would.
So it's about that ability to see the bigger picture, to understand the context beyond just the numbers.
Exactly. Humans can factor in things like global events, social trends, even psychological factors that can drive market behavior.
Right.
Algorithms are limited to the data they're fed.
Yeah.
They don't have that same intuitive grasp of the world.
That makes sense. It's kind of like the difference between using a GPS to navigate versus actually knowing your way around a city.
Ooh, I like that.
The GPS gets you from point A to point B, but it doesn't tell you about that cool little cafe on the side street
Right.
or warn you about that one intersection that's always jammed.
I love that analogy.
Yeah.
And in investing, just like navigating a city, sometimes those detours and side trips can lead to unexpected discoveries and opportunities.
So are you saying there's still a place for active investing even in this world of robo-advisors and automated portfolios?
I think so, but with a big caveat.
Okay.
Active investing, where you're trying to time the market and constantly buying and selling to beat the average, is incredibly challenging.
Yeah, I can imagine.
Statistically, very few people can consistently outperform the market over the long run.
Right.
It takes a lot of time, skill, and frankly, luck.
So time in the market beats timing the market.
Exactly. And that's where the autopilot approach is really powerful.
Right.
It takes the emotion out of it, helps you stay disciplined, and lets you benefit from that steady long-term growth.
Got it. So if we're not talking about becoming day traders,
Right.
how can we actually use our human judgment to enhance like an automated investment strategy?
One key area is in setting your overall investment strategy.
Okay.
Robo-advisors can ask you about your goals and risk tolerance, but they don't truly understand your unique circumstances, your values, your dreams.
Right.
Those are things you have to define for yourself before handing over the reins to the algorithm.
So it's like having a financial coach who helps you create a game plan.
Yeah.
And then you've got like a team of robots to execute that plan with precision.
That's a great way to put it. It really highlights the power of combining human insight with the efficiency of technology.
Okay, so human input's crucial at the beginning. Setting the goals, defining the strategy.
Yeah.
Are there other moments where human judgment comes into play?
Absolutely. Remember those periodic check-ins we talked about?
Yeah.
Those are crucial for making sure your autopilot is still on course, especially as your life changes.
Okay.
You might get a promotions, start a family,
Hmm.
decide to pursue a passion project that requires some financial adjustments.
Right.
Those are all things a robo-advisor just can't anticipate.
So the robots are great at following the plan, but they need us to like update the plan as life happens.
Precisely. It's about staying engaged with your finances, even if you're not making daily trading decisions.
Right.
You're still the captain of the ship.
I like that analogy.
You just have a really reliable crew handling those day-to-day operations.
It makes me realize that even with automation, financial literacy is still so important.
You hit the nail on the head.
Uh,
The more you understand about investing, the better equipped you'll be to make informed decisions.
Yeah.
Spot potential red flags and have productive conversations with financial professionals if needed. It's about being an informed investor, even if you're not a Wall Street guru.
And there are so many resources available these days.
For many.
Books, podcasts like this one, online courses, even financial advisors who specialize in working with millennials. There's really no excuse for not learning the basics.
Exactly. It's like having this whole library of financial knowledge at your fingertips.
Yeah.
And this is one of the most exciting things about the evolution of investing.
Yeah.
You know,
What's that?
it's becoming more accessible and understandable for everyone, not just the financial elite.
Okay. I love that. This has been such an eye-opening conversation.
Good. I'm glad to hear it.
I feel like I went from being intimidated by investing to feeling empowered to actually take control.
That's what we love to hear. It's all about finding that right balance for you,
Yeah.
leveraging the power of technology while staying engaged and informed.
Right.
Investing isn't about blindly following robots.
Right.
It's about using those tools to achieve your own unique financial goals.
Well said. And on that note, I think it's time to wrap up this deep dive.
Okay.
We've covered so much, from the mechanics of autopilot investing to this really interesting discussion about the role of human judgment.
It's been a pleasure exploring these topics with you. I always enjoy unpacking the complexities of finance and helping people feel more confident about their financial futures.
Me too. And to our listeners, thank you so much for joining us on this journey of financial discovery.
Yes.
We hope you feel inspired and equipped to take charge of your financial well-being.
Remember, investing is a marathon, not a sprint. It's about making those consistent, informed choices over time.
Yes.
And whether you choose to embrace autopilot investing or take a more hands-on approach, the most important thing is to stay curious, stay engaged, and keep learning.
Absolutely. Until next time, keep exploring, keep learning, and keep diving deep into the world of knowledge.
And who knows, maybe we'll see you on our next deep dive.
See ya.